Hi friends, welcome to the new presentation of Knowledge and Analysis series. In this presentation, I will talk about one of the most important and traditional asset class, which is gold. I will take you through the history of gold returns, compare it with the equity class. Also, I will talk about one of the option available to invest in paper gold. I hope you will like the session and also gain from this session. Gold has been one of the traditional investment in our country. You might have heard from your parents or grandparents, and they might have some stories to tell you of or suggest you that if you want to make an investment, then you should make it in the form of gold because this is one of the known asset class, from and which has passed on uh, to their relatives and the family members. So they are much more aware, and they much more track this always. What is the price of the gold and how does it increase? So they always consider this as a safer, one of the safest investment. Though it is not always true. It is not always. It is always myth also that gold is always tend to increase because gold also tends to decline and give some negative returns over the period of time. But again, this has been one of the favorite asset class, as most of the gold is also bought in form of jewelry, which is also a matter of pride. So how much jewelry you own, uh, uh, which is also pride for a family. So there is a much more bond or connect bond, in the sense, there is much more connect people has from this in this asset class and the belief system in this asset class, right? So most of the investment has happened in the physical form only. As mostly it is in form of jewelry. So again, this trend continues in India, and still people buy gold in physical form, in jewelry. But there are other options also, which I will explain uh, uh, in this presentation. Gold and equity has some relationship, so people now have started to invest in equity also, and especially mainly the young population, the youngsters, they are more inclined to equity also as an asset class. Now there is a relationship between the gold and equity. So generally it's inverse relationship. That means if the gold is performing well, the equities tend to underperform, and the equities are performing well, the gold tends to underperform. I will give you can see this as an example uh, in this slide, that there is a comparison, and I have compared this before 2019, because things really changed in 2020. So I want to compare it before that, and you see in these 9-10 years how a gold has performed. So in 2010, say gold performed really a good rate, gave a good return of 23%, while equity was underperforming as compared to gold. What happened in 2011 was like gold really performed even better, and the equity tends to be negative. Here it shows that this negative relation is reflecting here. Further, if you see in 2012, we cannot say in this year both these asset classes have gave decent good returns. So we cannot say really this is always true. But if we see further, gold tends to decline for few years, say till 2015. 12 to 15 it gave negative return. What happened in equity year? In between, equity has given some good returns in 2013 and 14. In 15 we still cannot make this comparison, make it true, but before that we can still say this a relationship has worked. After that also in 2016 again it worked. So gold performed well, and but equity underperformed here. What happened in 2017, was reverse. Equity performed really well, but gold underperformed. We cannot say much things about 2018 and 19, because both these asset classes have given good return. There is no guarantee that this relationship will always hold true, but most of the times you see as a general rule, in the longer period, this is true, because sometimes investor are related to, the sentiments of investors are, they use these strategies against each other, and the demands and supply gets impacted. So overall, this is some true, though there is no guarantee that this will also continue in future. But this you know, to make the decision, at least you should know that how these are related to each other and make some better decisions. Uh, Gold can also be invested through a mutual fund, right? You can always buy from a mutual fund, simply, buying the units from a mutual fund, and online you can opt for online options, and it is very easy to buy. One of the main asset asset class or option I will I will speak about is sovereign gold bond funds in this video, because that one of the most popular option is available to invest in the gold, in paper gold. You see this chart and can analyze this chart more on your own now, that how somewhere these two asset classes tends to inversely related to each other. So now you know how the gold really what kind of returns that gold has given over the period of time, and how it is related to equity market. So one of the most important uh, investments, one of the most important option that is available to us is sovereign gold bond fund. Sovereign gold bond fund has been recently gaining a lot of popularity because this is secured by Reserve Bank of India. So this is issued by Reserve Bank of India or RBI, and this is secured. So this is very safe investment, and you can simply buy this form of gold through your nationalized banks. So yeah, or other banks also could have been providing this option to invest in sovereign gold bond fund. It's very simple process. There are few banks which are offering this facility, and you can just go there and buy the fund. It is they would generally issue you the units, say 1 unit of gold, right? So if the market is like 10 gram of gold is like 60,000 rupees, for example, so you can buy 1 gram of gold at 6,000 rupees approximately. So you just can buy as many as units you want, uh, as per the market rate, which will be described in the offer, and you can there is no limit to buy. You can buy the they will additional give you 2.5% of interest on the nominal value, nominal price. So what is nominal price? Your investment value. So say you invest 1 lakh rupees in this bond, for example. So they will the you will get the interest of 2.5%, which is 2,500 rupees on 1 lakh every year, and you will continue getting this 2,500 every year till the maturity, which is 8 years. The maturity of the bond is 8 years from the investments. So after that, you don't have to even pay any taxes. It's like a tax-free investment, right? And you will also get the benefit of the returns of the gold price. So if the gold has been doubled, so if, for example, gold has given you double return over 8 years. So suppose 60,000 of gold becomes 1 lakh 20,000 after 8 years. I'm just giving you example, hypothetical situation. Then your value of 1 lakh will become 2 lakh, and then you have also gained this additional interest of 2,500 for 8 years, right? Which will be a 20,000 approx value. So 1 lakh 20,000, 1 lakh 20,000, 1 lakh plus 1 lakh plus 20,000, right? 1 lakh 20,000 overall you gained from investing 1 lakh, right, in 8 years. So you see, this is kind of good decent returns. I would say inflation beating returns also some at times, because uh, you know uh, the inflation is actually uh, the interest rate in the markets are usually now close to 5%. So you get better return at least for more than 5% at least, if you invest in this option. So you can further analyze based on your requirement, based on uh, your way of investing. You want to invest in gold, this is definitely one of the uh, important important option that is available to you. So you should be aware of that. The decision that you want to take is definitely up to you. But yeah, you can at least have the knowledge of that. What are the options that are available to invest in a gold, right? Uh, Thank you, friends, and again, I hope you have enjoyed this video and you also have gained something useful. You have got some information uh, which is different, which has helped you in taking some good decisions, or at least enhance your knowledge. So thank you again, and I will share more information, more knowledge sharing sessions. I will share more of knowledge with you guys, which I think which is very important for you to make some good decisions, get more informed, have knowledge about various things in simple manner, right? You don't need to be finance professional. You don't need to be anyone who knows everything, who understands everything, understand good maths, or understand good accounts, or you understand the markets or economies. I will try to simplify things for you, and my belief is that everyone can understand if the things are more simplified, if things are more explained in a better way, and in a lesser time, you get gain more knowledge of, and you can participate, sharing it further with your friends, with your colleagues and relatives, and overall, getting more informed. Thank you so much, and have a good day.